Hi, I'm Peter Lazaroff, and I'm here with my friend Sara Gelsheimer, and we're here to talk about mortgages because we're heading into peak home buying season, and the real estate market has really been wild to begin with, but also people refinancing has been a really popular topic. And there are a lot of different mortgages, and there isn't always a black and white answer to each of them. So, Sara, I'm going to let you kick us off. A lot of people think they're supposed to get into a 30-year mortgage, 15-year mortgage, but there are other products out there like adjustable rate mortgages or interest rate mortgages. How are you broadly thinking about the mortgage conversation, recognizing that there's a lot of different circumstances at play for each person?
Sure. Yeah, obviously, conventional mortgages are the most common. Those 15, 20, 30-year mortgages, they're oftentimes backed by the government, GMA, Freddie Mac. But, and you have to have somewhat of a minimum credit score, good payment history. For any mortgage that you're trying to get, those are all going to come into play. Obviously, when you start thinking about jumbo mortgages, that's when you're getting into, higher priced homes that require, oftentimes require a larger down payment, usually require a little bit higher credit score and, better debt to income ratios. So, how long you're going to be in the house and what size house you're looking for are kind of the two big factors when you start thinking about which kind of loans are best for you.
Well, and I think that the interest rates on these different types of mortgages vary. And you mentioned a jumbo mortgage versus what we would call a conforming mortgage, which I believe it's about 548,000 is where you reach. Once you go above that, you're now in jumbo loan territory. And there's nothing wrong with a jumbo loan. If you can afford a bigger house, it's just what they call those loans. So don't necessarily be afraid of that. But when you're trying to evaluate which option makes sense, I think you and I both feel like there's not a lot of reason to prepay down your mortgage. And certainly if you're going to be there for the long haul, maybe there's more of a case for it. But in general, if you are going to, say, take a 15-year fixed mortgage as opposed to a 30-year fixed, the payment's going to be larger because you're paying down the mortgage faster. But that might mean maybe you're not saving for retirement, or if you could max out an HSA account, for example, or an IRA or a 529, it's really a matter of trying to prioritize where your savings go.
Right. Especially with interest rates being as low as they are today, I'm not generally telling people to aggressively pay off their mortgage. Financially, it doesn't necessarily make sense. Now, granted, I do have a lot of people where that just gives them extreme peace of mind. And if that is you, by all means, and you can afford to do it on top of saving for retirement, HSA, education, then it's not necessarily a bad thing. But yeah, as you start thinking about which mortgage option to choose, obviously an adjustable rate mortgage can be helpful if you're in a, tighter income platform now than you think you will be down the road. Also, if you think you're only going to be in your house for maybe 5 years, then maybe an adjustable rate mortgage, which of course is going to have a lower interest rate now than, say, a 30-year fixed mortgage. But that interest rate is going to go up at some point. So if you can get out of the house before that happens, great. Maybe an adjustable mortgage makes sense for you. But if you expect to be in your house long term, while interest rates are so low, I'd say lock in a fixed rate mortgage at this point.
Well, and where I'm seeing people use these adjustable rate mortgages, and just for background, you might have something like a 5-year adjustable rate mortgage where there's an interest rate you pay for the first 5 years. And then after that, the interest rate goes up and down based on whatever the market rate is. So people can view this as a riskier mortgage if you were to stay in it. But generally, when you use what we call an ARM, an adjustable rate mortgage, the idea is that you're going to refinance at some point. And I know a lot of people, when they're buying what is going to be their second home, so they're moving out of their first home into a bigger second home. And as a result, the mortgage payment is bigger. And just about everybody I know who goes through this transition is a little bit fearful of that new, bigger mortgage payment. And sometimes the ARM will offer you a lower interest rate. And they figure, and I encourage this, there are always going to be recessions, and interest rates usually fall in recessions because the government lowers interest rates to stimulate the economy. So there's always going to be a good opportunity to refinance. So that's sometimes a situation where an ARM can make sense over the conventional. The real thing you have to watch out for, though, is that you're getting enough of an interest rate break. So maybe saving 0.25% is maybe not enough to incentivize you, whereas if you're at 0.5% or a full percent, well, sure, then let's take on the risk and recognize that we're going to refinance at some point the next time interest rates dip.
Yeah, and most of those have a cap. So run your financial, make sure you can, sustain what that cap is. And if you can, great, go with the adjustable rate mortgage. Take advantage of that lower rate right now. I mean, another thing to think about too, if you're saving in your example 0.5% using an ARM versus the fixed rate, see if you can, use that extra amount that you are saving by being in that and pay extra towards your principal. I mean, that's another way to help lower your total principal that you would need to refinance down the road.
That's a great point. Well, if you want more information about home buying or interest rates, we have a lot of content up on our blog on that topic right now, because we know the spring and the summertime is the peak time for buying homes. And we're also still near historically low interest rates where a lot of people are thinking about refinancing. So head over to plancorp.com, read all information. If you have additional questions, reach out to us anytime. Thanks so much for watching.